Hello, good afternoon, dear students. This is second lecture on valuation of goodwill. Okay, in our previous video, we discussed about the goodwill and types of goodwill, and even we discussed about the methods to valuation of goodwill. Okay, that means how to calculate goodwill. So we studied that we have different types of valuation of goodwill, that is average profit method, super profit method, capitalization method, annuity method. And further we have average profit method has been divided into simple average and weighted average. Okay, so we are doing this now valuation of goodwill in sequence. First we have to start from average profit method. Fine. Under average profit method, I'm starting with simple average method. Okay. So let us understand the valuation of goodwill under average profit method, under simple average profit method. Okay. So what is how are you going to calculate goodwill under average profit method? Suppose we have got two existing companies. This is A Ltd and this is B Ltd. Okay. Now this B Ltd company is going to purchase or buy A Ltd company. So while buying this A Ltd company, it has to give a purchase consideration that includes net assets value as well as goodwill value. So we can easily calculate the net asset by just deducting liabilities from the asset, but in addition to that you need to calculate goodwill as well. So how are you going to do that? So we are doing that through average profit method. Okay, so under average profit method, what we have to do is we have to see the previous year's profit of the A Ltd, that is the company which is going to be purchased by B Ltd. Okay, so we have under this thing we have to see profits of the previous year of transferor company. So according to that we will be finding the future profit, and according to that we will be calculating goodwill. Okay, so here you can see A Ltd has got profit in 2008. Okay, in 2009 also profit, 2020 also profit. So this is very good company because it's giving what profit in all the preceding 3 years. Then obviously if it is going giving profits in the previous year, then obviously in 21, 22, 23 also, or in future period also, this particular business is going to give us profit. Okay, that is certain, but it doesn't mean this particular business will give profit for indefinite period. We cannot say that. Okay, maximum what we can predict is since it's giving profit in the previous year, that means it will also give profit in future date, but for only 5 years, 6 years, like that, because after that market is very dynamic, it changes frequently. Okay, market doesn't remain the same, so we cannot say that since it's giving profit in the previous year, it will give what profit for indefinite period. So we can just predict that since it's giving profit, so it will give profit for another 5-6 years, not more than that. Okay, so according to that we are going to we are going to find goodwill from profit or average profit method. Okay, so in this particular method what we have to do is on the basis of previous profits we are going to find what will be the profit of this particular business in 2021, 22, 23. Okay, so for that what you have to do is first you have to see profits in previous year, then we have to adjust something. Okay, some adjustments should be made. Okay, some adjustments should be made. Then after adjusting all those adjustments we will be finding average profit. So average profit, how are you going to find? That is total profit divided by number of years. Okay, so total profit means all 3 years profit after adjustment, then number of years. Suppose in our case we have got 3 years, 2018, 19, 20 divided by 3 years. Okay, this is also called profit, average profit, or you can say future maintainable profit also. Okay, so we have to bring that, then we have to find out the value of goodwill. Value of goodwill means what? Average profit into number of years purchase. Okay, average profit, that is future maintainable profit, you can also say, into number of years purchase. Number of years purchase means what? Till in future, till when it will give same kind of profit. I have already said that it won't be giving the profit for an indefinite period of time because of dynamicness of what? Market. So it will give certainly profit for 3 years, 4 years, 5 years accordingly. Okay, suppose they have decided according to this thing agreement that it will give 3 years in future same kind of profit, then you have to just multiply this average profit by numbers of years purchase. This suppose 3 years or 4 years according to question, it will be given in your question, right? Now we have to adjust, since I have already told you that before finding average profit you have to adjust something. Okay, so how are you going to adjust, and what are the things you need to adjust? So you have to write adjustment. Okay, profit 2018, 19, 20. Okay, so you have to adjust something. What are the adjustment? See, abnormal losses. Okay, abnormal losses means those losses which were incurred by the transferor company, okay, which are very abnormal, which is not going to happen again and again. Okay, again and again, like for example this particular A Ltd has got lost in 2018 due to fire. Suppose due to fire, so this is very abnormal loss. Suppose it has got loss due to fire or earthquake, that is 2 lakh, it has reduced in that particular year, then you have to add that, because that is totally abnormal, that is not going to happen again and again. In this way, if there is a abnormal income, okay, in any year, then that you need to deduct. Okay, abnormal income, suppose this particular business has got income through what? Lottery. Okay, like that, that is in abnormal, no? Lottery and all, so that is totally abnormal. Okay, if that kind of income is there, then you have to deduct from any which year that abnormal income has occurred. Okay, then future income. Okay, if in future some income is arriving, then you have to add that also. We will do this while doing our what? This thing, practical problems. Okay, like that, future expenses also. Future expense, if in future some expenses is going on, then like insurance, if you have to previously this particular company has not done insurance, now after purchasing, if insurance has to be done, then of course it is expenses for the new business, so that should be deducted from here. Okay, future expenses. So like that, after adjusting all these things, it comes future maintainable profit. What? Future maintainable profit. So after adjustment in 2018, 2019, 2020. Okay, so after doing adjustment, you have to have what? Future maintainable profit. So let us solve one question from average profit method. Okay, now see, B Company Limited purchased the business of A Ltd on 30/1/2021. Okay, so B company is what? Purchasing this. The profit earned by A Ltd in the preceding 3 years ending 31st December as follows. Okay, so these are profits are given: 2018 1 lakh, 2019 1 lakh 10,000, 2020 2 lakh. Okay, this is the profit of preceding year of ALTD. Now there are some adjustments. On scrutiny of the accounts of the following information was found. Okay, what are the following information were found? Number one, the profit of the year 2019 included a non-recurring income of rupees 3,000. So the profit of the year 2019 was added by what? Non-recurring income. It has to be deducted from this because this is non-recurring. It won't happen again and again. So you need to deduct this. Okay. Then the profit of the year 2020 was reduced by 10,000 on account of extraordinary loss due to fire. So this is what? Abnormal loss. Okay, due to fire. So it has to be added back. Okay. Then the proprietor of the business were not insured, and it is now advisable to insure the business in future. The premium is estimated at rupees 5,000 per annum. Okay, so now earlier ALTD didn't insure this business, so now after purchasing, BLTD has to insure this. It has to make insurance every year 5,000. So it is expenditure in the future. So expenditure in the future should be what? Deduct from this particular adjustment. Okay. Then 4 number, to cover the cost of management, an annual charge of rupees 10,000 should be made in future every year. So there can be a cost of management, okay, that is not done previously. Now it has to be done. So this is also future what? Expenditure. Future it has to be reduced. Compute the value of goodwill of the business. Okay, the goodwill of the business is estimated at 2 years purchase of the average profit for the past year. So you have to calculate business for estimated 2 years purchase. That means the business will be giving expected to give same kind of profit for 2 years only. 2 years only, as per the 3 years profit. Okay, hope you understood this. Now according to this, we have to solve the question. Now let us solve it. First we have to make adjustment of past profits. Okay. So particulars, okay, here's rupees. Okay, 2018, 19, 20. Okay, profits, as we already know, the profits are given 1 lakh, 2009, 1 lakh 10,000 and 2 lakhs. So I have just written 1 lakh, 10,000 and 2,000. Okay, now we have to adjust abnormal things. Okay, so first one was what? The profit of the year 2019 included the non-recurring income of 3 lakh. So this is non-recurring income in the past. You need to what you have to do is you need to deduct this. So non-recurring income in 2019, that is 3,000. You have to deduct this minus. Okay, then second one is the profit of the year 2020 was reduced by the 10,000 on account of extraordinary loss. So it was extraordinary loss, this non-recurring loss which won't be happening in the future. Okay, this is because this is extraordinary loss by fire. So you need to add back. Okay, so add loss due to fire in which year? 2020. So add 10,000 here. Okay, then the proprietor business were not insured, so it has to be insured 5,000 per annum. Okay, yearly. So it has to be deducted because this is future loss. So insurance premium every year you need to deduct 5,000. Then cost of management, okay, is there. Okay, it is also expenditure in future. So you have to deduct 10,000 every year. So cost of management 10,000 minus 10,000. Okay, like this. Then after adjusting, after deducting and adding all these things, future maintainable profit will arrive. So it will be 1 lakh minus what? 1 lakh minus 15,000. This is 15,000. So 85. So when you deduct all these things, it will 92. This is 1 lakh 95. So this is future maintainable profit. Now you have to find out average profit, that is total profit by number of years. So total profit, this you have to add divided number of years is 3 years profit. So it will be this one rupees, this one is average profit. Okay, you can say future maintainable profit, average future maintainable profit as well. Now valuation of goodwill. Okay, valuation of goodwill is equal to, as I already told you, average profit, that is future maintainable profit, into number of years purchase. So we have found this average future maintainable profit or average profit, that is 1,24,000 into number of years is how much? 2 years. Okay, so it should be multiplied by 2, so it will be this one, 2,48,000. This is value of goodwill. Hope you understood this. Okay.